My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Will next week be filled with lots more days like today? With the Dow lost 256 points, S&P dipped 0.39%, NASDAQ sank 0.83%. Will we keep getting hammered by incessant woes and worries about the economy, even as we give a pass to the companies that cater to the strong consumer? Or just putting this out there, will we come to realization that without some sort of trade deal with China, or at least Mexico and Canada, that this market is going to be headed lower no matter what? I fear it'll actually be the latter, because the strength of the stock market earlier this week was so broad, well, that the higher the stocks go, the less lift you get from NABAF. Remember NABAF? Yeah, that's my magical acronym for not as bad as feared. NABAF only works when stocks are down going into earnings, like the bank stocks were going into this week. If they've already run, NABAF doesn't offer you much protection. They'll need to deliver genuinely better than expected numbers, and that's much harder to do for a lot of the companies in this environment. With that in mind, let me walk you through the game plan for next week. This is Cramer's game plan. It's the only game plan that matters. Well, the other game plans you see, they're not real. Halliburton reports early Monday morning. We call this one HAL, okay, like, 2001 Space Odyssey. And I'm not a huge fan of the fossil fuel stocks, you know that, but I recognize that Halliburton's a very well-run company. I think it could deliver a decent number. It trades at just 12.5 times next year's earnings estimates, almost 4% yield. One problem. Hal's biggest competitor is Schlumberger. Symbol there is SLB. And it reported a fantastic quarter today. Good conference call, too. But even though its stock has been in the doghouse, on this great quarter, what happened? It only rallied. It rallied a little more than 1%. That's hardly any lift. And slob, as we call it on Wall Street, has a 6% yield. Well, let me tell you something. That's not encouraging. After the close, we hear from one that I'm just going to listen in on. It's called TD Ameritrade. Maybe we'll get a sense of what this new era of zero commissions means for their profitability. I want to know what their other revenue streams look like. If the earnings are going lower, so will the stock, even from these battered levels. TD Ameritrade has become among the riskier brokerage stocks out there because they're more dependent on commissions. But let's see what they have to say, because the stocks come down so much that some would say it's a bargain. If I were a CEO, you know what? Never in a million years would I bother to report on Tuesday, the 22nd, because there's no time to stop, look, and listen to these companies that strut their stuff. I mean, look, I can't even touch all the important ones here. This is a cursory look at what I think matters. First, Procter & Gamble. Now, look, I think it's going to be a fine quarter. Stock's fallen 8 points from its highs. Markets rotated into financials and the cheaper, more cyclical tech stocks. I think it can rotate back now that the international industrials are reporting. I mean, they're starting to sound the tariff alarm. Procter stock should come back into vogue. I interviewed David Taylor not that long ago at Delivering Alpha, a great conference, and I really felt pretty good about Procter's prospects. You know what? I feel the same way about Steve Easterbrook and McDonald's, and I also like Kimberly-Clark. These stocks are winners in an industrial slowdown. I think you can buy either of them. Both have chronically been undervalued. McDonald's, in particular these days, it's under way too much pressure. That said, you know what's better? You know what's better than both of those? Yum Brands. That's the one to watch. Hey, next, United Technologies should buck the trend of weaker industrials. The same way, by the way, that Honeywell, Darius at Damtech did just earlier this week. Now, United Technologies is merging with Raytheon, and it's still a long way off. But I bet this amalgam of elevators and aircraft parts and climate controls, I think it can win even without a China deal. Great value here. After the close, we hear from not value, but a great company, which is Chipotle, with a terrific CEO, by the way. Even though the stock's up almost 100% this year, 100%, I still like it. I expect to hear good things about their delivery, their throughput, and the new carne asada dish that's incredibly popular. I told the cooks at Bar San Miguel, I want carne asada on the menu. But then instead what I really did was just order it for one of those DoorDash things. Oh, on Wednesday morning, Boeing reports Well, this could be the most important quarter of the week, month, day, year. Today, we learned some seemingly incriminating text messages from a key Boeing employee who allegedly indicated knowledge of real problems with the system that went haywire on the two 737 MAX flights that crashed, killing all aboard. When that news came out, this stock got hammered. It's down nearly 7%. The story is horrifying. Now, this is mad money. I'm not trying to make, just try to make any sort of equivalence to what happened with Boeing in the jets. But this thing is going to get resolved. And I felt that today may have been one of the lower moments. And you got to start thinking about what's going to happen when this plane gets off the ground, which I think is going to happen in the next 6 months. I know this is very contrary view to what everyone's thinking, but you have to think like that if you're going to make good money on Wall Street. By the way, memo to the Chinese Communist Party. If you really want to show the White House you're serious about making a deal, what you shouldn't do is buy soybeans. You should buy Boeing planes. You know what's unusual? When a stock holds up after getting hit with a big downgrade, especially on a down day. Today, though, we had two of them, Caterpillar and Waste Management. Now, the former barely budged. The latter ended up rallying. They both reported on Wednesday. What does this tell us? Okay, let's think about this. Typically, I'd say it means the stock's ready to roar. I think that can absolutely happen with Waste Management. I predict a strong quarter. Caterpillar, tougher call. Own it for the Charitable Trust. I'm telling ActionAlertsPlus.com members that it could go lower, meaning it will probably go lower, before it goes higher. That said, Cat stock's got a 3% yield. It will be one of the biggest winners. Again, if we get any of these trade deals that are being floated around the globe, including the ones that my old pal Larry Kudlow, who's now the chief economic advisor to the president, said is going to happen, maybe as soon as before Thanksgiving. Then there's Thermo Fisher, TMO. If you want consistent earnings that tend to generate slow and steady gains in the stock, I want you to look no further than the bioscience equipment maker that is Thermo Fisher. They've got hardly any economic sensitivity. It's a terrific long-term investment. Oh, Mr. Casper, come back, will you? I mean, come on. Come on. All right, after the close, we hear from Microsoft. Unfortunately, this stock has become such a market darling that it needs to print a smashing quarter with real strength across Windows and gaming and LinkedIn and Azure, the cloud business. And you know what? I think Microsoft's going to do just that. I'm only using... Anyway, PayPal reports too. Last quarter, we got a shade down in the earnings. Ooh, it hit the stock. Could happen again. But you know what? You've made money buying into weakness. I say wait and see. Now, there used to be nothing more psychedelic than a Tesla conference call. I used to listen to it when I used to play The Doors' The End when it was on, This is the end. I would actually play it while I listened to the call. But these days, Elon Musk has become hobbled, silent even, a pitiful, helpless giant. Can't talk about the company's prospects the way he used to. That's why the stocks could be a NABF play going into the quarter and nothing more. And without the braggadocio Elon Musk that we miss so much, making gigantic claims of profitability and lots of cars, maybe the stock does a whole lot of nothing. Now, we know the cloud kings are under pressure. More on that later. What matters right now is that ServiceNow is down 60 points from its high, 303 to 243, and it's set up for a not as bad as feared number. So this one might be worth a trade. NOWO. Hey, you want clockwork like Thermo Fisher? How about Danaher, which reports Thursday? This one's doubling down on life sciences by acquiring GE's high-growth healthcare business. It's another good non-economically sensitive trade. Or better yet, let's just make that one an investment. After the close, Amazon reports it's a large position by Charitable Trust. We own it for the long haul, though, and we'll stick with it regardless of this particular quarter. See, Amazon has two modes, spend and harvest. You want to buy it when it's in spend mode because then the stock gets depressed, which means you buy it now. Finally, on Friday, we get two stocks that have managed to buck downturns in their own groups. Anheuser-Busch, the international beer company, and VF Corp, the apparel biz. Both stocks are up about 40% for the year. VF actually hit an all-time high today, powered by Vans. That's their terrific shoe brand, which is founded on a culture of learning. I Googled that and found out. If either of these stocks gets hit, I'd be a buyer on weakness. Anheuser-Busch spinning off that international business, the Asian business. They got a good beer business. What can I say? Bottom line, next week is a tough week to game. Too many companies, too many variables. It might just be worth it to sit on your hands throughout the week. No buys. Unless we see something truly game-changing from China. Otherwise, at this point in earnings season, you should simply try to stop, look, and listen and get no sleep whatsoever because there's just way too much homework to do. Betsy in Virginia. Betsy!
Hi, Jim. I'm a longtime viewer and a first-time caller, and my question is about Intuitive Surgical, which rose sharply after earnings report came out yesterday. I've been buying at different prices to dollar cost average for the long haul. Should I continue to hold?
I loved the quarter. It reminded me of the old days. I'm so glad to see that Da Vinci's back. I thought it never went away. My local hospital Overlook, I did a fundraiser. When they got a Da Vinci, I'm a complete believer. What can I say? A complete believer. There's a lot happening. One finger only, please. A lot happening next week. It may be worth just getting through it without making any sort of wild moves. Well, Mad Money tonight, after today's losses, wondering if the slew of better than expected earnings are enough to keep this market afloat. I'm breaking down the action and telling you what's ahead. Then after a busy week for earnings, I'm eyeing what's arguably the most important sector. The Fins, as we call them. No, not the Dolphins. Oh, please. They're not as good as the Summit Hilltoppers. I'm calling about the banks. And I'm giving you a full breakdown of what we learned. And after a difficult week for the Cloud Kings, wonder if they can turn anytime soon. I'm checking the forecast. Stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.